Hi, my name is Dr. Annette Moultrie, and this is Accounting 101. So, let's see what we will teach in this video. But before we proceed with the video, I need you to click on the subscribe button. Click on the thumbs up button below. Also, click on the notification bell so you'll be notified of upcoming videos. In this video, we will begin with Learning Objective 5, Prepare Financial Statements. Now, in our previous video, we saw how the data is summarized in Exhibit 1.5, and it also provided you with the 4 main financial statements. Here in Exhibit 1.6, it's going to describe, you see there's a description of each financial statement. Now, the first financial statement prepared is the income statement, followed by the statement of retained earnings or the statement of owner's equity. The balance sheet is the third statement prepared, and the statement of cash flows is the final report prepared. So how do you prepare financial statements? We know that financial statements are business documents that are used to communicate information needed to make business decisions. The income statement provides information about the profitability for a particular period for a business. The statement of owner's equity shows the changes in capital for a business entity during a time period, such as a month, a quarter, or a year. The next financial statement is the balance sheet. The balance sheet reports the business entity's economic resources, which is the assets, the amount of debt owed to creditors, which is the liabilities, and the net worth of the entity, which is the equity. So the balance sheet actually shows the financial position of the company. And the last financial statement, the statement of cash flows, it shows how cash changed over the period. The income statement is a summary of a business entity's revenues and expenses for a period of time. The income statement tells whether the business generated net income or did the business suffer a net loss. So on the income statement, only revenues and expenses are reported. Only revenues and expenses are reported on the income statement. Here you see here is Smart Touch Learning income statement. It has the month ended November 30th, 2018. It shows the revenue, which is the $8,500, and it shows also the expenses. Here they have rent expense and salary expenses. You have the total of the expenses. So the revenue minus expenses is your net income. The statement of owner's equity shows the changes in the owner's capital account for a specific period. Here you see in Exhibit 1.8, notice that the net income for the month is the net income that was calculated on the income statement. So with the statement of owner's equity, you see that the net income from the income statement is added to the statement of owner's equity. The balance sheet lists a business entity's assets, its liabilities, and owner's equity as of a specific date. So the balance sheet is a snapshot of the entity. Always remember that the balance sheet will have the assets, liabilities, and owner's equity. The statement of cash flows reports the change in cash during the period. The ending cash balance on statement of cash flows is the same as ending cash reported on the balance sheet. The statement of cash flows is divided into 3 sections. You have your operating, the investing, and the financing. And here in Exhibit 110, it shows you the 3 sections of the statement of cash flows. You have your operating, okay? Then you have your investing. Then you have your financing. So again, the ending cash balance must match the cash balance on the balance sheet. Okay, so that was the end of Objective 5. Now we're getting into Learning Objective 6, which involves use financial statement and return on assets to evaluate business performance. So how do you use financial statements to evaluate business performance? Now, one of the many tools you use to evaluate performance is return on assets, or ROA. So the return on assets measures how profitable a company uses its assets, okay? So return on assets is calculated by dividing net income by the average total assets. Again, the return on assets is a tool users of financial statements use to determine how well a company is performing. The return on assets measures how well a company uses its assets to generate net income. And here you'll see the formula to calculate return on assets, which is net income divided by average total assets. And what is the average total assets? It is your beginning total assets plus your ending total assets divided by 2. So this is the end of Learning Objective 5 and Learning Objective 6. Learning Objective 5 dealt with preparing financial statements, and Learning Objective 6 was using financial statements and return on assets to evaluate business performance. So this is the end of Learning Objective 5 and Learning Objective 6.